Hello traders, Gary Wagner here. Just about 1 o'clock in Honolulu, 7 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 17th day of September, 2021, and this is the daily report for gold and silver, our weekend review. And our week was wild, filled with downside action, especially yesterday when the Census Bureau released its retail numbers for August, completely opposite of what economic forecasts were coming in at. That took gold down about $41. Now it's about the FOMC meeting scheduled to start on Tuesday and conclude on Wednesday of next week. Right now, what we know is that the top 18 Federal Reserve officials are divided in terms of when to start tapering. That will be the primary discussion, and they have a mixed bag of data to analyze as they make their decisions. Next week promises to be a most interesting week. An extremely difficult week for gold, with gold losing approximately $36 on the week. Today, trading lower by $2.80, with gold futures basis, the December contract, currently fixed at $1,753.90. Dollar strength has definitely accounted for the downside pressure in gold this week. However, the vast majority has been selling pressure as market participants are concerned about the outcome of next week's FOMC meeting and whether or not they will push up the timeline to announce when they will begin to taper their monthly asset purchases of $120 billion. This first chart is a daily chart of December futures, and we can clearly see the absolute carnage yesterday when gold gave up roughly $41. However, what is clear when we convert our daily into a weekly chart is even though there was sustained damage in gold prices this week, it was about equal with the damage we saw last week and still no way compares to the second week of June, in which we saw gold drop from below $1,880 down to approximately $1,770. Another way to take a longer-term view of gold pricing is through a Henkinashi or Japanese average chart, both daily and weekly. The first one we're going to look at is a weekly chart. We can see that last week we had a pivotal candle because prior to that, we were definitely in an uptrend throughout the month. That's these three candles here. The small-bodied doji represents that pivotal candle, and then this week, of course, indicates a reversal. When we take a look at the daily Henkinashi, we get a different picture of the short-term aspect of the sell-off. We can certainly see that the market was trading, in essence, sideways for the most part, but over these last two trading days, we saw a defined shift in market sentiment as we went from slightly bullish, small green candles to the strong downside moves witnessed yesterday and to a less degree today, but with no upper wicks and large body size. That indicates that the bearish trend could very well still be intact. This last chart is also a daily candlestick chart. However, we have added fundamental information about why certain days created certain moves, such as a disappointing jobs report for August. That is when we saw gold prices peak to $1,836 on the third day of September, as well as the flash crash that occurred following the July jobs report. Also, this is when the inflationary figures came out. We saw gold finally break above this sideways trading action. However, it stalled just shy of the 200-day moving average. And then on Wednesday, we saw technical selling pressure drop gold below 1,800 on a closing basis. And then, of course, yesterday's dramatic $41 decline was followed by a modest or fractional decline in pricing today. Once again, with the exception of palladium, all of the precious metals are lower. However, it has been silver that has been hardest hit. Silver opened up the week on Monday at $23.77 and is currently at $22.36 after factoring in today's almost 2% decline, 43 cents, and yesterday's over 3% decline. Silver has lost well over $1 per ounce during this trading week. This has been Gary Wagner wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.